Hey everyone, and welcome back to another Tesla weekly video. For today we have a lot to discuss, so let's get right into this. The Tesla weekly insured numbers for the first week of the quarter, first week of April, came in at 1,900. Now that number seems very small, but remember, at the start of the quarter the number usually is low. Yes, it is lower than expected, but don't be surprised because previously we have seen it go up quite fast. Again, we're in a type of environment where, well, demand for EVs worldwide is not as high as it was before. The model mix of the Tesla sales remains a bit unchanged, 75% Model Y, 25% Model 3. Then in China, the reported sales number were 62,398, 77% Model Y, 23% Model 3s, which also goes to show that despite the Model Y being at a higher price, people still like it, which is very strange because I do think that the Model 3, the refresh Model 3, looks incredibly good. Now, with regards to the Giga Shanghai export numbers, those came in at 26,666 units. This brings local sales to 62,398. Then out of those numbers, the model mix here for China, 14,481 Model 3s, 47,917 Model Ys. For the export numbers, 16,997 Model 3s and 9,669 Model Ys. As for the mix of Tesla sales by region worldwide, we can still see that the United States, actually it's North America, it's still the largest region for Tesla, despite it being down 16% year over year. China is second place, that's down 3.8% year over year. Europe down 9.5% year over year, and rest of the world is up 18.5% year over year, but that's still quite a small number, but could definitely grow over time. Of course, we know that Q1 is not going to be a great quarter for Tesla, or even a good quarter for Tesla. I don't expect Q2 to be a good quarter either. They talked about it during the earnings call 3 months ago. So yeah, the expectations have been quite low, but I do think that they're going to come in even a bit lower than that, unless they somehow surprise us. Now going forward, second half of the year going into 2025, that's where things should be getting a bit more interesting. Of course, we have earnings report coming out in, I think, 10 days or so, so we're going to get more information on that. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, of course, there is no Tesla weekly video without a note from the great Morgan Stanley Adam Jonas. So yet again, he released a note, or let's say blog post. It says here, we believe Tesla, an auto company, may be unusually well positioned in the first three of the above attributes. Investors are struggling to see how the company can use its infrastructure and network to achieve a path to monetization. There are paths within transportation, over 10 trillion miles traveled annually in the global auto market, but FSD take rate and robotaxi may not move the needle significantly in the near term. While August 8 may be important to the stock, positive or negative, we are eager to hear about the next thing. The title of his note is Tesla and Nvidia, the journey to AI supremacy. He also says that Tesla's fleet drives more miles in 5 minutes than Apple's now cancelled autonomous fleet had reportedly driven in a year. By 2030, we estimate Tesla's global vehicle fleet will approach 40 million units in service, driving over 400 billion miles per year. Over 1 billion miles per day, or nearly 13,000 miles per second. From our conversation with AI experts, such a monumental dataset may be an advantage for machine learning and neural net training. Yeah, the competition might be coming, but I don't think they will ever catch those numbers anytime soon, if not ever. By the way, talking about the competition, Volkswagen electric car sales plunge as Europe returns to petrol. So the EV sales fell by 24% in the first 3 months of the year as high inflation and rising energy prices dampened demand. Mercedes EV sales declined at the start of the year as well. As you can see, they dropped 8% year over year. So clearly, there is something going on with regards to demand for EVs. Because if we look at US first quarter auto sales, that grew by 4.1%, despite high interest rates, but EV growth slows further. So yeah, clearly demand for EVs is slowing down, whether it's because lack of education, information, or just maybe they're outpricing their potential customers. Now, moving on to the big news here, which is FSD. Every week it seems we have something else coming out with regards to FSD. Last week, over 1 billion FSD miles driven, and as you can see, a huge acceleration more recently. Free trials, more people trying maybe version 12 being extremely good, which means less engagement, which means more miles driven. Then on Friday, Tesla came out with the announcement that, well, they're going to drop the monthly FSD subscription cost to $99 from $199 per month. Of course, since that announcement, a lot of noise, a lot of people started to talk about that. That's great, adoption rate will go up, more miles driven, more data, which makes the whole FSD program much better. Because that means that more and more people in many other regions, of course in the United States and Canada, are going to test that software out. More information comes in because right now maybe they think, look, we don't really have that many disengagements anymore. It's time for us to open up the pool and try and see what the software, what the system can learn. Make a bit more mistakes. Of course, it's still supervised. Make a bit more mistakes. So then we can release it into the wild to the major public. Now, some people say, okay, $99 per month, it's quite cheap. So why is there still the option to buy the whole thing for $12,000? Doesn't make any sense, right? Because if you pay $99 per month, it will take 12 years until you reach that $12,000 price tag. So why buy the full thing? Doesn't make any sense. Then some people say, you know what? You buy the $12,000 pack. That means that in the future, you'll be able to enter into the robotaxi network. I think Farzad talked about that, a bit like the medallion for the yellow cabs, right? Or the taxis. You have to pay for a certain license to operate your taxi, certain fee. It's pretty high. For all taxis, I think worldwide, it's pretty high. But at least you enter into that network. So maybe that's the same thing that's going to happen here. But then again, remember Elon Musk said a couple of years ago that the price of FSD will increase over time, the value will reach $100,000, etc., etc. Well, now the price has become a bit lower. You can also not always transfer your FSD to your new Tesla, which for me is a huge red flag. I mean, if you pay already so much money for the software, not the subscription, but if you paid $10,000, $12,000 for it, I think it was $15,000 at one point. If you paid that full price, I think you should be allowed to unconditionally transfer it to your next Tesla. I think that's just the minimum requirement of respect for your customers. But going back to the $99 per month, I think it's a big deal. Not a big deal because of the profits. Because remember, if somebody pays right now $12,000, it's worth way more for Tesla than $99 per month today. So a huge increase in profitability in the short term, I don't think that will happen. Actually, I don't know. I wrote down a couple of things. You've probably seen it already. It's not that difficult to do. So the Tesla fleet, 6 million cars. In the US, FSD capable, around 2 million. It costs $99 per month for FSD supervised version. I put here a take rate of 15%. I've seen people say 20, 25, 30. We can play around with this just to show you. 15%, pretty conservative right now. So that means revenue per quarter, close to $90 million. Revenue per year, $356.4 million. Then, let's say they open it up to China. I don't know, a year from now, 2 years from now. Because remember, in China, they probably don't want their data to go outside of China. It still needs to be trained China locally, their roads, etc., etc. I don't know, but it's also around 2 million cars. The price there is probably going to be a bit lower, right? Because it's China. So I put here $59, take rate 15%, revenue for that, $53.1 million per year, $212.4 million. If you combine both of those, this is with the current size of the fleet, you get a bit more than $500 million in revenue. If you put a software margin on it, 80%, could be a bit more, but I put 80%, you get $455 million that will probably flow straight to your bottom line each and every year based on this tiny fleet. Because remember, in the future, there will be way more cars capable of FSD than there are today. And of course, The higher the take rate, let's say we put it at 25%, well, the higher the revenue per year and the higher the profits as well. I mean, at 25%, US and China combined, you're close to $1 billion in revenue per year. Now, of course, this is just napkin math, right? The price of SSD per month can go down or can go higher in the future. I don't know how many people will actually use it, so the take rate might be higher, might be lower, but this is just to show you the effect of a subscription model, how that can impact Tesla's financial, especially in the medium to long term. Because in the short term, we don't know what might happen. We don't know how they will recognize that revenue, right? Even before, I think they still have an amount to recognize, so maybe they'll do it this quarter to have the impact of a bad quarter not be as bad for the stock. Remains to be seen. I do still think that they're going to mention, oh, we've seen an increase in take rate of FSD in the last couple of weeks, just so the impact of a bad quarter won't be that big on the stock. Remains to be seen. Then last two things here. One, Elon is going to meet the Prime Minister of India, I believe in the coming weeks. No brainer to open up another Gigafactory or Megapack factory or maybe both in India. And so lastly here, the graph. Actually, we've closed the week on a green candle despite Friday being an extremely red day, same for Wednesday. But as you can see, if we zoom in, it's now the third, almost fourth week in a row that we've failed to go over the 20-day moving average. So there is quite some pressure there. Of course, the market is waiting for the next earnings report, despite all of us knowing that it's not going to be a good one. Overall, RSI is low/neutral. There could be a little bit of momentum forming here. But again, earnings in 10 days, stock will be a roller coaster of a ride until then and probably after the call as well. So that will be it for this video. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.